Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. The dip in house prices looks to be behind us. Domain is forecasting a steady, well-established recovery over the next financial year. What's more, some capital cities are predicted to reach record high prices. Dr. Nicola Powell is the Chief of Research and Economics at Domain. Nicola, welcome back to Fear and Greed.
Thank you for having me on again. It's so great to be here.
A steady, well-established recovery. What does that mean exactly? What does that look like?
Yeah, look, that is the simple explanation, really. We have seen early part of 2023 a recovery being led by Sydney. So we're already seeing prices rise. And actually, when you drill down onto smaller geographic level within our capital cities, some of these areas, those premium areas, troughed in price mid last year. So the areas such as the eastern suburbs, Lower North Shore, those kind of areas, Mornington Peninsula, inner east of Melbourne. So we've got some of these areas that have seen consecutive months of price rises. But what we're expecting over the next financial year is largely Australia-wide. We will see all of our capital city markets move into a recovery. It is still going to be led by Sydney. Sydney's recovery is well established already, and we're predicting, particularly for house prices, they're going to continue to lead. And we're predicting or forecasting that house prices could rise between 6 and 9% over the next financial year, which means that house prices by the end of next financial year will have fully recovered from the 2022 downturn.
Okay, because I think you're also predicting houses in Adelaide and Perth could also reach record levels in the next 12 months or so.
That is absolutely correct. And we're also forecasting that unit prices in Brisbane, Adelaide and Hobart could also be at new record highs by the end of next financial year. I think the interesting part of this is the cities that stood out to me were Adelaide and Perth. And our forecast suggests that Adelaide and Perth could avoid any material loss in prices because we're still expecting them to continue to rise. And Adelaide, is the one that has always been that kind of quiet achiever. And historically, when you look at the past 30 years of price data for Adelaide house prices very rarely go backwards. They go through these periods of sideways movement in growth. And that is what we're predicting. We're actually predicting that Adelaide house prices and Perth are probably going to avoid a downturn entirely.
Wow. The one that stood out to me was Melbourne, only because it doesn't seem to be keeping up with the rest of the capital cities. Is that right?
Yeah, that is true. So it's a much more modest outlook, I think, for Melbourne. House prices really could be stable, see, growth of maybe 2% over the next financial year. I think Melbourne's an interesting one, really was impacted by demographic shifts. And it's almost like it's still got that pandemic hangover from those demographic patterns. Now, what I mean by that is obviously we've got net overseas migration roaring back into Australia. We know that roughly 35% go to New South Wales, about 30% go to Victoria, about 17% go to Queensland, and the rest is distributed elsewhere. So we know that net overseas migration into Melbourne is strong currently, but most overseas migrants do rent upon arrival. And I think, it's why we've seen Melbourne's rental market really tighten. It's got such a low vacancy rate, currently sitting at 0.9%. But I think when you look at interstate migration, that was really one of the big demographic shifts that we saw during the pandemic. And there's still a bit of tailwind there being created from that shift. There was this negative outflow from Victoria into other states and territories. And actually, the latest data from ABS still shows that it is running into the negative as well. The other point I would make for Melbourne is not as far advanced in its property price cycle as a market like Sydney. You tend to find these big cities, Sydney and Melbourne, they follow one another quite closely. They see quite wild, big upswings, big downturns in price compared to other capital cities. But what we're seeing in Melbourne is quite delayed compared to Sydney. I would say it's, maybe about 6 months behind in terms of where it's at in the property cycle compared to a market like Sydney. We've only just started to see Melbourne stabilise overall at that macro level for a city recently. And we've got some of those premium areas now increasing in price, as I mentioned earlier, Mornington Peninsula and the inner east of Melbourne. So a few reasons and a few different dynamics going on for the Melbourne market.
Okay, what about the supply side of the equation? So you mentioned the rush of migration that we're seeing at the moment and we'll see for a while, and that's a well-told story. What about a lack of supply? Is that a reason for pushing up prices, particularly in those cities like Sydney?
Absolutely the case. I would say that the lack of supply has really been the backbone that's been underpinning the price recovery so far in 2023. We've seen new listings really unseasonably weak since spring of last year. When you look at that combined capitals, new listings are still 11% below the 5-year average, but total supply is even worse in comparison. Total supply on the market is 19% below the 5-year average. So there is a lack of choice. There's a lack of supply. It does differ depending upon the capital city. And actually, Melbourne is one of those cities that does differ. So supply is a little bit better in Melbourne compared to, say, Sydney. Sydney really has struggled for supply. And I think that really does reflect the different dynamics in the two markets. And I think, the pullback from sellers is pretty normal. It falls into that behavioral economics category. You don't want to sell when prices are softening. Throw in the fact you've got interest rate rising and you've got high levels of inflation. We have seen sellers sit on the sidelines. I would say probably the pullback from sellers has been a bit more substantial this time round. The last downturn, 2017 to 2019, we did see a pullback from sellers, but I would say this time round, and particularly late in 2022, that hesitancy has definitely been there.
Stay with me, Nicola. We'll be back in a minute. My guest this morning is Dr. Nicola Powell, Chief of Research and Economics at Domain. I want to get into regional areas, but we better mention Brisbane and Hobart because we don't want to leave those two capital cities out. Brisbane always, I find, quite an interesting market because, auction clearance rates, for example, so the figures you guys put out, often not so much in recent weeks, but mostly it's way below the other capital cities. And it's a quirky market, it seems to me.
Yeah, so auction clearance rates, I probably would say, is not a good indicator of market health for Brisbane. It's not a very good auction-centric market. I would say Sydney, Melbourne, Canberra, and I would include Adelaide at the moment. In terms of auction clearance rates, are a really good pulse check. They're frequent. Right. Every Saturday, you can see how the market's tracking. Brisbane, for some reason, the method of selling by auction is not really ingrained in the market behaviour. But what we saw during the pandemic boom was a really unusual period where those clearance rates were roaring in Brisbane. But I do think what we've seen is the fluctuations and the lower clearance rates coming out of Brisbane is just it's reverting back to what it would normally see. Private treaty, selling by private treaty is the method that selling a home dominates in Brisbane.
Okay, so what about regional Australia? How do you think that'll perform over the next 12 months or so?
So we are expecting prices to rise in regional Australia overall across the combined regionals between 1% and 3% for house prices, a little bit more subdued for unit prices. It is different depending upon location. So, for example, regional Queensland out of the three major states is expected to be the better performer, see between 3% and 4% increase in house prices over the next financial year. But largely speaking, the trend for regionals is much more subdued. I think what we're seeing are patterns are going back to what we would tend to see historically, and that focus is going to be on our capital cities led by Sydney, and that is what we historically tend to see. So, I think the outlook is much more muted, I think, for the regional markets, and, we've got to remember what we saw during the pandemic. Price cycle was highly unusual, and really regional areas did avoid any massive downturn in price, nothing compared to what we saw coming out of Sydney. So, and I think, if we're going to drill down even smaller, I think in those regional areas, we saw an uplift during the pandemic across every single regional area. There's almost no corner of Australia that didn't get a boost in property price. I think what we'll see now is those local areas, Ballarat, Geelong, Orange and Wollongong, those areas that are within close proximity to either a major capital city or themselves have a major employment hub. They're the areas that will continue to perform well. And we'll probably see much more subdued muted conditions in further flung regional areas.
Okay. Are you surprised by the results, Nicola? I ask that because we still have rising interest rates, and the idea that some of these cities will be hitting new highs at a time when the full impact of interest rate rises will be hitting buyers is slightly surprising.
It is. And look, in the decade that I've been looking at property data, I have decided never to be surprised by anything that unravels.
Good motto, yes.
Yeah. Look, and I think, I was thinking about this report and how, your everyday Australian would react to knowing that many cities will have fully recovered by the end of next financial year. And I think for somebody who doesn't pour their time over property data, yes, it's absolutely surprising. I think that we've got a lot of headwinds still ahead of us, and there is going to be an element that affordability is going to contain price growth anyway, because as you said, we still haven't felt the full impacts of rising interest rates overall economically, and we still are not at the peak cash rate. So we're likely to see one, maybe two more rate hikes from the RBA. It's very clear that they will move again higher. So there is buyers out there really battling that deterioration in borrowing capacity. And I think that affordability is definitely front of mind, and that will really contain the rate of price growth. I think once we get to the point where we see a stabilisation of the cash rate, or we potentially see the cash rate being cut in the first half of next year, I think that might be a stronger catalyst to see greater rates of growth within our housing markets.
Nicola, thank you for talking to Fear and Greed.
Thank you.
That was Dr. Nicola Powell, Chief of Research and Economics at Domain. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.